if you take care of yourself as a founder, or not just a founder, but anyone in their role in work, you've got to take care of yourself before you can take care of your job and the other people around you. And I do think that it's a habit that's very hard for people to break when they start a company or they're in a busy job, because they are so focused on being successful or getting things done that they feel like taking any time for themselves is, something that you shouldn't be doing, and therefore feel guilty to do it.
Hi everyone, I'm your host Rohit Bhargava, and you are listening to episode 198 of the Startup Playbook podcast, a weekly series where I sit down with successful tech founders, investors, and operators to unpack their journey, lessons, and insights to help current and future entrepreneurs. The voice that you heard a little bit earlier was that of our guest for this episode, Rohan Workman. Rohan is the founder and CEO of Skalata, a seed stage venture capital firm that launched in 2018. They've gone on to build a portfolio of over 80 companies across their two funds, making them one of the most active investors in Australia. Prior to this, he was the director of MAP, which was Melbourne Uni's Accelerator program that he helped grow to the number 8th ranked program in the world. In this episode, we covered a range of topics, including how his first job out of uni, working for corporate recovery, taught him about business, lessons from his first startup, RosterCloud, why Skalata transitioned from a hybrid accelerator program to a more traditional venture capital fund, and much more. Without further ado, here is my interview with Rohan Workman. Hi, Rohan. Welcome to the Startup Playbook podcast, and thanks so much for taking the time to be on the show today.
Absolute pleasure. Thanks, Rohit.
It's been a long time coming. We've been trying to organise this for a little while.
It has been a while, hasn't it?
So, Rohan, for those people that may not be as familiar with you and your background, do you want to share a little bit about your story and what got you here today?
Sure thing. So, born and raised in Melbourne, did a commerce degree at university, went and worked at a company called McGrath-Nicol, which was divested from KPMG in 2004. And I worked there from 2008 to 2011 during the GFC and worked on some of Australia's largest corporate collapses, which was an interesting time indeed. After that, started my own software company, which was called RosterCloud, and made every mistake you can possibly make. And around the same time, I was pretty skint, so I took a part-time job at the University of Melbourne, which escalated into a full-time role at the Melbourne Accelerator program, or MAP, and then finished up there in 2017. And then not too long after, hatched up the idea for Skalata Ventures with some colleagues from the University of Melbourne. And that is a seed stage fund, which today has now raised 2 investment funds and made 80 investments across the country. So that's it in a nutshell.
Yeah, very cool. And obviously so many parts of your career that we'll get into in this episode, but I thought I'd start off with a really interesting story from your mum. Because
I was wondering how long this would take.
To get to speak to it. She had a lot of wonderful things to say about you. It's I think I've mentioned this before, one of my favorite parts of these podcast interviews is getting to speak to a few who feel close to the guests as part of the research process. One of the things that she mentioned was, as you were coming into uni, you were determined to get a 6-pack. And you started up a 6-month 6-pack challenge or something.
I did, yeah. Well, it was actually around the time that I started at MAP. And yeah, okay. So what happened was I was starting a company. I was stressed out of my mind. I had no idea what I was doing, and I couldn't find any support because as you would know, back in 2011, 2012, there was no startup industry really in Australia. And so it was very stressful, was very poor, and kind of went into a mode where one of the really few things that I could control was how much I could eat and how much I exercised. So I became bloody minded about being really disciplined with that part of my life. And after 3 months, got a 6-pack, and it's been a while since then. It's they're not sustainable. So yeah. Yeah.
I mean, obviously, as your mum put it, she saw you being very disciplined with your nutrition, exercise, and all those sort of things. And as you mentioned, at a very sort of difficult and stressful time, which, I'm such a big proponent of founders taking care of themselves. I think so many of us get fully focused on just business and business only, and everything else in life, whether it's sort of relationships, health, all those sort of things kind of get put to the side at the detriment of our sort of longer term life. But I guess for you, in terms of both prioritizing that and also the determination to kind of stick with it, where did that come from?
Oh, I was pretty bloody minded, to be honest. I think it was mainly a result of a whole bunch of things in my personal life and professional life that weren't going to plan. And so I thought, no, this is something that I can control, and so I want to be successful at that. And it made me feel like I was making progress in that element. And that was pretty aggressive way of going about things, to be honest, in terms of the discipline required and what that meant for your lifestyle. But I couldn't agree more that if you take care of yourself as a founder, or any kind of, not just a founder, but anyone in their role in work, you've got to take care of yourself before you can take care of your job and the other people around you. And I do think that it's a habit that's very hard for people to break when they start a company or they're in a busy job, because they are so focused on being successful or getting things done that they feel like taking any time for themselves is, something that you shouldn't be doing, and therefore feel guilty to do it. But, I know that I'm talking to someone who values this very deeply, because I hear that you've just come off a 10-day silent retreat, Rohit.
Yeah, we were just talking about this just before we turned on the mic. So yeah, just got back. We're recording this on what is it today? Wednesday?
It's a Wednesday.
Wednesday. I got back
afternoon.
on Sunday. So
tell us about that. 10 days, no talking. I'd love to get a bunch of investors in a room to see how long they can go without talking.
10 days, no talking. You can't talk to absolutely anyone there except for 5 minutes that you get at midday that you can request with the teacher to specifically talk about the technique. It's 100 hours of meditation. So you're going you wake up at 4, first meditation's from like 4:30 till 5:30. And then the last one finishes at 9, lights out at 9:30. And yeah, just a full on intense experience. But as we were saying, it's one of the things, like, I'm very grateful that I've got some very close friends that have done this before and kept pushing me over the years to do something like this. And the idea of taking 10 days away from work and all of these other things just seemed like such a difficult barrier to break through. But as we were saying, like, if you put it in the context of 10 days to improve the rest of your life, it's a very easy trade-off to make. But in the moment, it seems like the most difficult, arduous decision to make.
What have you taken from it that you're going to apply?
A lot. So again, as I was saying, I came back on Sunday. One of the things my friend recommended was just sit and write, because you're not allowed to write it all through the process. So I spent 3.5 hours writing, and I'm still not done. But the entire teaching is around having a balanced perspective and remaining economist. So the idea being that you don't look at things the way that you wish for them to be, but the way that they are. So a lot of the time we think about things in the past or the future, and the way they put it is like you're suffering through all of these scenarios and situations that you put yourself through.
Yep.
But instead of doing that, you should observe what kind of happens and have some form of detachment from it, because you can't really control it in that way. And so the whole meditation builds up. So the first 3 days are really strange. You just focus on first breathing and then sensations. So for 30 hours, you're just sitting there trying to feel the sensations between your nostrils and your upper lip.
So do you have a very nuanced feeling between your upper lip and your nostrils?
It's getting there. It's getting there. And then you kind of use that as a framework to kind of scan the rest of your body. And the idea behind that is that kind of surfaces up a lot of what they call cravings and aversions to things. So things that you have issues with in the past or whatever, but they kind of surface and manifest themselves in the body. And it's easier to process things as those detached interactions that you feel versus those emotional kind of attachments through things. So super, super interesting in terms of like what I learned, like just learning to have a different perspective on a lot of issues that sort of come up. So even just interactions with people, I can go on for this about hours, but one of my favorite things about it was they had discourses every night, which is the main teacher. It's recordings of his that for an hour and 15 minutes every night he would go through. And one of the things that he spoke about was that kind of stuck with me was, if someone's trying to hurt you and they come at you with a piece of wood that's on fire, what you should do is pour water on it and the situation's just done. But what a lot of the time we tend to do is, instead of putting water on it, we pour fuel on it because we want to hurt the person that's trying to hurt us. But in the end, both of you get hurt. And it's this kind of like constant cycle. So yeah, there's a lot that I kind of like to.
I feel like maybe you should do an episode on this, because I'm sure there's a lot to unpack.
Yeah, I mean, there'll be a blog post coming out at some point, if not already by the time this episode comes out. But yeah, highly, I think you definitely have to be at the right stage to be ready to take on those sort of things. I never really did much meditation before, so I was going to the deep end and didn't really know what I was getting myself into. But that's kind of how I learn things. So would highly, highly recommend it. But yeah, you definitely have to be in a place to take it on.
Well done you for doing it. It's very, very impressive.
Thank you. Yeah, and I think it's just such an incredible experience and a gift that you can have for yourself, but then also started talking to a lot of my family and friends who haven't done this about some of the benefits and approaches on things and just things that you kind of learn. And a few of them are thinking about doing that as well. So it's, just kind of like spreading that hopefully that kind of message to people that, taking care of yourself, to come back to the initial point, is super, super important. And even just purely from a business perspective, I think you just make much better decisions if you're in a better place yourself versus, if you're struggling in a couple of areas of your life, you're just much more likely to be reactive and just, make more short-term decisions.
I couldn't agree more. One of the most impressive people that I've ever had the good fortune of meeting in my life was John Berry, who's the former US ambassador to Australia, and he was the first openly gay US ambassador ever, and he is absolutely wonderful and charming. And I had the good fortune of being at an event where he was addressing the group, and someone said to him, what would you recommend for people of our generation, people kind of mid to late 20s and early 30s? Was there any guidance he would give us? And he said, look, we're going through what is probably going to be considered in history a technical renaissance, like an amazing period of time, but we are so connected. And so it's probably not a surprise that all of the religions were, created when someone went into the desert for 40 days and kind of thought about the world. And so if there's one thing that he urged us to do, it was to switch off from time to time and actually think through things and get a bit of distance, a bit of space and a bit of perspective. And so I think what you've done is doing that to a team. Yeah.
I mean, even just, I was talking to one of our portfolio founders. He went to Perth for a wedding over the weekend, and for 3 days was just off his phone for the first time in years.
Yep.
And he was like, oh, it was such an incredible experience, and just got to be really in the moment with things in a way that you don't really get to be. So, again, from a founder perspective, like founders' jobs are 24/7, but I think it's probably also important to realize, like, both of us are investors into companies, and performance of the companies is really important, but this is a long-term thing, not a
marathon, not a sprint.
It's
Absolutely.
a marathon, and so you want your founders to be taking care of themselves and making decisions and those sort of things from the right place, because we want them and the businesses to succeed long term.
Well, they won't if they don't. Yeah.
Speaking of like really difficult situations, one other story that your mum told me was
thanks, Mum.
was when you were at McGrath-Nicol. So this is your first job out of uni, and she mentioned that there was a situation where the boss was away and there was a bit of press or media coming out and a bunch of people had to be let go.
Yep.
And she mentioned that you got picked to be the person to tell a bunch of people who were significantly older than you, had families, those sort of things, that they were being let go.
Yes.
What was that experience like as, a fairly young person at the time?
It wasn't pleasant. Yeah, I know what she is referring to. There was a company, I won't mention it, the name of the company, but there was a company that had borrowed a lot of money. They had bought a lot of businesses and they had not integrated them properly. And as a result, they hadn't got the economies of scale that they wanted. It all went pear-shaped during the GFC, and then McGrath-Nicol was appointed as the receiver and manager of that business. And generally what that means is that there's a secured lender, normally one of the big banks, says, we're going to take over control of the company from the directors, and we're going to operate it and do one of three things. We're either going to liquidate it, sell it, or return it to solvency. And so we operated that company for about 12 months, and it was probably 6+ months into that, they decided that there was a division they couldn't sell and they needed to make a bunch of people redundant. And I don't know why, because it probably shouldn't have been me at all. But yes, actually, I'm not quite sure actually. That one I'd have to think through in a bit more detail. But yes, I did have to have a tough conversation with a few of the people there who were much older than me and give them the news. And the key thing there was they were all exceptional because they knew something was coming. The company had gone under. They had, it was probably more likely than not that they were going to get made redundant. And so they saw it coming and they couldn't have been more graceful in the way that they handled it. But I think the other part too was, and probably part of the reason why perhaps I was asked to do it, was because I'd spent 6 to 12 months there building relationships for those people. So it was a lot different for someone who knew them and had been doing, I'd like to think, my best to try and help them in their situation, giving them the news rather than someone that they didn't know. And I think, when in that job, you'd go into a company and people really did not like you on day one because, you're the bad guy, and I get it. But after a little while, when you're working pretty big hours and you're trying to help, save the company effectively, I think people start to realize actually you're there to try and help, and it's not necessarily your fault that the company's in that position. And so I think after a while, those relationships actually became quite strong, which was quite nice, and still chat to some of those people today, but infrequently, mind you. But yes, that wasn't a career highlight, that's for sure.
Yeah, I remember we had Sam Kathari from Everlab on before, and one of the things that he mentioned, and I speak to, having spoken to so many founders, one of the biggest challenges for them, especially if they start businesses early on, is letting go of people.
Mm-hmm.
And I think Sam kind of told a story where he sort of went about it in such a way that people didn't even really know whether they were being let go or not, all those sort of things. I guess any advice in terms of, or kind of like looking back on that time, what helped you get through it? And I guess having gone through that and having seen what you've seen on both sides of the table, like what advice do you have for founders and being able to sort of handle that process, or even just kind of coming to that point?
Oh yeah, I mean, I doubted I handled that particularly well at all, because I had no real training or experience in what I was doing, and I've had to do more of that over the years. I think there's probably a couple of different things to note. The first is get legal advice. You don't want to be breaching any employment laws. And, even when I've had to make people redundant or move people on, there's a lot of nuance in employment contracts given the nature of your company and their employment contract. And so you want to make sure you're doing everything above board. Secondly, being really clear with people about what is happening. You don't want there to be any doubt about what the process is. And the third is that there's going to be a difference between how the company, and I'll come back to describe what that means in a second, but how the company will approach things and how some team members might want things to be approached. And you have to reconcile that. And what I mean by that is, the company is, there's a company, there's shareholders, there's perhaps even a board of directors, and you're representing the company. And there are certain things that you can and you can't say to team members on occasion, and you try to be as transparent as you possibly can. But, I listened to the Lee Jasper episode recently, and he was talking about when they were listed that he couldn't be as transparent with the team as he would have liked. And there are instances, even when you're not listed, where you can't be as transparent as you would like. And so when you are going through those sorts of processes with team members, there's going to be a perspective that team members have, which is a legitimate perspective, that they might not love the way in which things have happened, or what has been communicated to them, or the way that things are, going down. But unfortunately, the nature of the role means that is the way that it goes ahead. And the key thing, that you can try and do is respect the team members and be respectful of that approach, or that perspective, which I do think is valid. But you're there to do a job, and you need to get on with it, unfortunately. And, it's not a pleasant thing to do. It has to be done. There is no successful company in the world that hasn't had to let a lot of people go in order to be successful. And it's also, you try and maintain the relationships with the team members that you've had as well, and help them find the next role, and try and make sure that you communicate with other team members who are still there about what's going on as well. So it's not a pleasant experience to go through by any stretch, but it is critically important. And most founders don't do it early enough or frequently enough.
I'm also curious about, I think that would have given you such a interesting perspective on, I guess, the bad side of business, which is bad practices that lead to, companies going into receivership.
Yep.
What were some of the kind of commonalities that you saw between those businesses, and how they sort of shaped how you sort of think about, starting RosterCloud, or even just companies that you invest in?
It's interesting. There are... all of the companies that I worked at when I was at McGrath-Nicol were kind of large multinational, not necessarily multinational, but large companies. So very different from a small private company. And a lot of the time it was around people who, there were two kinds of businesses, and this is going back a while, and I wasn't a particularly experienced, I was a grad and I was there for 3 years. So it was a different perspective that I had as a grad that you would have if you were a partner and you knew all the background about what was actually going on and the experience to understand that. But there were companies that were good businesses that just couldn't refinance their debt and therefore got into a pickle. And there are other companies where there was some mismanagement and things that probably weren't going, weren't appropriate, and people weren't taking care of the company as they should have. And there's one company that we worked on, and the directors decided that the company cars should be Jaguars or something. And it's like, well, why are you spending money on Jaguars? Like, that's just stupid. And there were a bunch of instances like that where sometimes directors or people in leadership positions were not making smart business decisions, and that was probably reflected of their attitude towards the entire company, and as a result things went pear-shaped. So definitely some lessons in what not to do. The other thing which I didn't appreciate at the time, but I'm grateful for now, is that when I was at McGrath-Nicol, I did learn a lot about how to run a professional organization by the way that McGrath-Nicol ran itself. And so, you hear about people getting a background at one of the big four accounting firms or an investment bank or whatever it might be. There's a lot to be learned from those environments that I think that some people would be, founders would be well placed to try and emulate in the companies that they start around company culture or discipline or, accounting practices or transparency or HR practices or those sorts of things. And I think sometimes in startups, a lot of founders think, oh, great, I don't have to have a boss. I can be really casual. I can wear a t-shirt or hoodie or whatever I want to do. But they don't necessarily realize that the most successful founders and the most successful startups are the ones that are clinically professional. And although they might not wear suits and ties, they are clinically professional and they have really strong financial management and reporting practices. They have really strong discipline when it comes to the expectations and the culture they set around the companies. And we see that across our portfolio. We see the founders that are really disciplined, really professional, and you can see the rate at which they are able to execute and just how fast how much of a competitive advantage that can be. And that's one of the things one of our investors in Perth mentioned to me a little while ago, which has stuck with me, is that speed can be a competitive advantage, but you can't have speed unless you have some infrastructure around how your company operates that allows you to run quickly. And a lot of founders think that any sort of process or procedure is actually bureaucracy and therefore is going to get in the way of that, which is not true.
Yeah, I was about to ask, that would be what most people's assumption is, the benefit of being at a startup is you're not burdened by process in decision making and you can just move a lot faster. But there's a saying by a guy named Jocko Willink, discipline equals freedom, around just, and I'm with you, I think that a certain amount of discipline is really helpful in giving you the right framework and structure to move quickly as well. From your perspective, when should founders start thinking about that, adding those sort of processes or that rigor? Is that a day one? Is that getting to a particular point? Where do you think that makes the most sense?
Not in day one. I mean, there's 3 phases in the startup journey. There's discovery, validation, and then growth. In discovery, founders apprenticing a problem, trying to understand if there's something there worth solving. Validation, do people care about your product or your solution, and will they pay for it? And growth is, and validation probably also includes, can you find a repeatable, scalable sales or growth engine? And then 3, growth is sales and marketing spend to grow really quickly. With a founding team, you've got 2, 3, 4 people who are all doing everything, and it kind of makes sense at that point in time because everyone's got odd jobs to do. But once you start adding other people in and you're going beyond the founding team, that's when it's important to start thinking about the system that you're using to scale. And we spend a lot of time with our founders on this. But generally speaking, one of the things we encourage our founders to do is the highest leverage activity that you can possibly do. And if you're spending a bunch of your time doing a low leverage activity, then to the extent that you can hire someone and get them in to do that instead, that's a really good thing to be doing. And high leverage activities would be hiring somebody, it would be closing a deal, but it wouldn't necessarily be doing all of the initial sales calls or the really early things or testing bug features, those sorts of things, if you can employ someone else to do that. And once you have a handful of people, I think those systems become more important because then you can add to that infrastructure. As an entrepreneur, you're almost a systems engineer. And you're designing a system which is the company. And so you should be working on the company. And to the extent that you're working in the company, you should be aware of what your role is. And are you making a deliberate decision to be performing that role because you can't afford to have someone else do it or you're best placed to do it? Or are you just not thinking about what you're doing and you're just doing it in a bit of a daydream state? And therefore probably not being as effective as you can in terms of how you design the organization, which is the vessel to be successful.
We're going to take a very quick break from this podcast to talk about one of our partners, Vanta. So if you're building a SaaS business and want to quickly unlock growth and build customer trust, one way to do this is by achieving compliance with SOC 2, ISO 27001, CPS 234, Essential 8, or other in-demand compliance frameworks. However, this process is often time-intensive and very costly. Vanta automates up to 90% of compliance, making you audit ready quickly and saving you up to 85% of associated costs. And not only that, Vanta scales with your business. With a market-leading trust management platform to help you continuously monitor compliance, unify risk management, and streamline security reviews. You can join over 8,000 global companies like Atlassian, Dovetail, and Indebted that use Vanta to build trust and prove security in real time. As a listener of the show, you can get up to $1,000 US off Vanta when you head over to vanta.com/demo. All right, let's get back to the episode.
Yeah, I think it's something that's kind of brought up in quite a few interviews that we've done previously on the podcast, is where, founders are playing roles within companies.
Yep.
It's that, a lot of the time you can think that you're plugging a gap, but a lot of the time you're also holding the company back, because if you were to hire someone, you're looking for someone world-class. And so if you're performing those specific functions, are you being the world-class operator that you need to do that, to do that specific function?
Probably not. I mean, I would be gobsmacked if you couldn't hire someone to do pretty much any function within a company better than you. One of the best things we ever did, and it was wonderful. We run a funds management business. We've got 2 funds. We've got 97 investors. We have a board. We've got shareholders. And so, for a long time, it was myself doing the financial reporting along with the help of our wonderful financial controller. But she was working a day and a half a week, and so she had limited capacity. And we brought on a CFO who has deep experience in funds management, and he just alleviated so much of the stress that I was facing, because one, I wasn't interested in preparing the financial reports because I wanted to be working with the founders or working with investors to get more money and helping our portfolio. And also, it was higher leverage for me to be doing the support for the founders, because I could do that now. CFO probably can't. But 2, also, he was able to do it to a much higher standard, much more easily, and also prepare it in better shape. And so I knew that we were getting a much better outcome by somebody else doing it who had 20 years experience doing that rather than me. And yes, I could do it, but I didn't love doing it and I wasn't great at doing it. So why wouldn't we get someone else in if we could? And we did. And I think those sorts of, and when you see someone who is exceptional at what they are doing, it really elevates the standards that you have for other functions within the company, and the bar gets higher, which is good for everyone.
Yeah. And, speaking of your own experience with RosterCloud, you mentioned at the start that you made every mistake possible.
Oh God, yeah.
I feel like that's everyone's experience with their first company. But I guess looking back, what would you do differently?
I mean, the first thing that we did when we started RosterCloud was the most important thing, and we registered a company with ASIC, and we started paying the $400 dollar annual fee or whatever it was to register a company, and we didn't even bother going to speak to one prospective customer. So, I mean, I think that's changed my tune. Obviously, you're much better off going and speaking to as many prospective customers as you possibly can, rather than worrying about like a company being established. And the other thing too was we were terrified of releasing our MVP and asking for money for it. So we kept on wanting to make it better and better and better. And that, I think, is a very common mistake that most founders make, where, they feel embarrassed by it, which is the whole point of an MVP. And therefore they hold off on trying to make sales from it. But really what you're doing is delaying validation in terms of, actually understanding if anyone's willing to pay for what it was. And our first customer was the Big Group, which is a large catering company, does a lot of stuff at the Formula One and the horse racing and those sorts of things. And I remember us going, I somehow was connected through, I think, a random connection with the HR manager. And I had an iPad and I was showing our software and it wasn't even really working properly. And I said, look, I know you've probably got some really, highly impressive system that you're using already, but this is what we've built. I'd love your feedback to understand what, we'd need to look like or what we'd need to do in order to get you guys to use it. And they said, actually, can we have a trial? And so it kind of surprised me that instance. And then I was very, very embarrassed when we asked them to pay the first invoice, because I was thought, how could you possibly want to pay for this thing? But I think that's a pretty common mistake that a lot of founders make.
Mm-hmm. Any advice on getting over that hurdle?
Yeah, you need to get over yourself. And that's pretty much it. Just get over yourself and go and do it. And I do think that it's also potentially, I mean, it's easy to say get over yourself, but one of the other things too is by going to people, and it's the old adage, you ask for advice and you get money, you ask for money and you get advice. If you can go to prospective customers early on and bring them along the journey and say, hey, look, I'm developing this thing. I'd love your feedback. What do you think? Not everyone, but a portion of people will be wanting to help you out because they're excited about what you're doing. They want to help. People want to help each other out. And if you bring them along, they can be really powerful early adopters. They'll possibly be your first customers. And there's a typical, early adopter curve. You've got your early adopters, early majority, late majority, and then laggards. Some of those early adopters will become your product champions. And so they become case studies. They pay for the product. They refer you to other customers. So those sorts of people are critical to the success of a company. And one of the best pieces of advice I've been given was by Daryl Wade, who's one of the founders of Skalata, and he's also co-founder of Intrepid Travel. And he said that when you're talking with people and about your brand and who you are, it's kind of like drops in a pond, where the first drop is probably the team and maybe the board, maybe some early investors, those sorts of things. But the drops that are, as they go out, it could be your investors or customers, or it could be suppliers. But if you can help those people package up, what you're doing and how you're doing it and understand it, then you create this really powerful marketing mechanism where you're enabling the people in and around you to build the brand and the profile of, what you're doing, which is hugely valuable. And so I do think that, this is another example where if you can bring those people along the journey with you, being those early adopter customers, they can help propagate what you're doing in that analogy.
Speaking of brand and bringing people along with you, I think what you built at MAP was absolutely incredible.
Thank you.
I remember like very early stages of the startup ecosystem. MAP was definitely one of those communities that sort of brought everyone together. I remember your galas even early on, just attracting everyone along from the space. What was that sort of experience like in building and sort of launching MAP from the ground up?
It was phenomenal. It was a really, really wonderful experience. And I think something that I look back on very fondly, because got to work with and meet some incredible people. When I got involved in MAP, concept had been designed and it had been greenlit, and so that the budget had been allocated for it. So I wasn't one of the people who hatched up the idea, nor was I one of the people who kind of got it going. I kind of came in as kind of the first employee, I suppose. And I think it tapped into the zeitgeist for a couple of reasons. One was that there were few places to go in Melbourne for entrepreneurial communities. It was probably MAP and maybe Inspire 9 and maybe the York Butter Factory, but this is going back a while. I'm trying to think what else there might have been. And two, we were very lucky that in the very first year we had some phenomenal companies apply for funding. And it comes as a surprise, because great founders will sniff out money wherever they can find it, especially if it's equity free. But that meant that you also attracted some really great mentors. And so the great mentors then attracted even better companies to apply and even better mentors, if you know what I mean. And that loop just started kind of circling. And what we found was that Melbourne University as well is a fairly independent entity. Not in the university sector, because all of universities have got politics and reputations and those sorts of things. But in the startup community, it's not like it's a competition between a couple of different co-working spaces or something like that. Melbourne University is a place where a lot of people are happy to go there and be involved, because it's not quite like it's in the private sector, if that makes sense. And so what we found is we just tapped into a bit of a vein of interest at the time, and it kind of went from there.
Yeah. And from what I understand, you were ranked at one stage as the 8th program in the world.
Yeah.
Universities.
Oh, yeah, that was... So universities love nothing more than a ranking, which is ironic, because I think today some of the rankings were released and a few of the universities have slid down a few spots, which no one will be very happy about. But there was a group in Scandinavia somewhere that decided to start ranking entrepreneurial programs at universities around the world. And I think the first year we were something like 13th, and the second year we were 8th. And as soon as that happened, the university, there was actually a noticeable difference where the university latched onto that, because instead of saying, we have this entrepreneurial program, you should get involved, and so on and so forth, they could now say, we have something that is ranked 8th, best in the world. And I've got no idea how many programs were in there or those sorts of things. But it meant that there was a lot more focus on MAP from various parts of the university. So that certainly helped fuel things.
What do you think made MAP so successful?
It would definitely be the people. I think we were very fortunate that Melbourne University just has the most extraordinary people wanting to come and be involved as a part of it. People who would come and visit from overseas. I used to travel around a bit when I was at MAP to Europe or to America and visit other universities and learn what they were doing and come back. And they had exactly the same problems. Like, we think that, Australia is very bad at when it comes to R&D, we're very bad at the D. There's still a long way to go there. But a lot of other universities around the world have the same problems. But you'd go over there, and a lot of them, I didn't realize this until I got over there, were interested to meet with me, not because of who I was or what I was doing, but Melbourne University is the best ranked university in Australia. And so they would be like, oh, well, Harvard's the best university in America, so it must be like Harvard. And Melbourne's a great university, don't get me wrong, but there's probably a big difference between Melbourne and Harvard. And so I think you'd get this quality of people blowing through Melbourne University, which was spectacular, but you'd also have the most phenomenal people want to come and get involved. So I mentioned Darryl Wade before. He's an alum of Melbourne. He did a commerce degree. He came back to the campus after 20 or 30 years from graduating, and he was chatting to the Dean of Faculty of Business and Economics, and he was saying, oh, look, we have this MAP thing. Why don't you get along to that? You know, Glyn Davis, the former Vice Chancellor, was chatting to Paul Little, and he came along to a gala, and that's how we got to know Paul, who joined the MAP Advisory Board and is one of the co-founders of Skalata. We had just some amazing people in and around it who wanted to help out and give back and mentor. And the mentor community was phenomenal. The first couple of years of MAP, I spent so much time just walking around Melbourne, meeting alumni, and said, hey, we had this program, do you want to be a mentor, and getting them involved. And the way in which they gave back was just extraordinary.
Yeah. And you kind of touched on this a little bit earlier about almost the success of the university sort of latching onto things. I think my experience within, although very brief, within sort of larger organizations is sometimes that's a very negative thing.
Yes.
Because suddenly everyone wants to get involved in different ways. And in a lot of ways, like I found that kind of dilutes the impact and the message and just the mission of what you're trying to do. What was that experience like in terms of navigating that?
Yeah, that was a challenge for me personally. I think so. Universities generally, and Melbourne is a university, but universities generally can be wonderful places and also extraordinarily frustrating places. The politics and bureaucracy at universities is mind-boggling, and especially so at Melbourne University. And if you speak to anyone at Melbourne University, that will not come as a surprise. They'll be the first people to tell you the politics and the bureaucracy is a real challenge. And we had that ranking, and then we had the gala, which you mentioned before. And the first year we did that, we had 360 odd people come, and within a couple of years, it got to 860 people coming along. So it was quite a big event, and you'd have a whole bunch of people from, the business community who are big donors to the school, to the university, or executives, or we invited all the other universities that we knew to come and be part of it too. And so it was a big, big event. But at that point, the kind of, MAP for me personally was more enjoyable when it was a skunk works and no one really knew about it. It was under the radar. As soon as we got that level of profile, that was the beginning of the end of my time there, because I wasn't well placed to deal with the politics and the bureaucracy. And some of that was really quite challenging. And so we got more scrutiny. We got more people wanting to be involved. We had more people from the university wanting to take the gala, for example. And I remember being at steering committee meetings where I was hauled up there and asked to explain why there weren't any research projects that were being, or research papers that were being shared and spoken about at these sorts of events. And the reason why people came to the gala and the reason why they loved it was because it was Melbourne University not being Melbourne University for once. And there's all these amazing entrepreneurs who are getting involved. But yes, success has many different owners. And so, I think when I started in 2012, we had 492 people come to the public events. And in 2016, it would have been over 11,000. And in 2017, that was the last year that I was there, finished up, I think, in August, and not too long after the gala. And at that point, I was pretty happy to be out of Melbourne University.
Yeah, I was about to say, I spoke to Maxine as well, was she the first hire for you?
Yes.
Matt? Yeah.
And at Skalata.
Yeah, and you guys have worked together for the last 12 years. And,
yes.
One of the things that she mentioned was, I imagine it's almost bittersweet of sort of leaving something like MAP behind that you've sort of built up. As she sort of described it, was your kind of like, it's your first little baby, and having to sort of step away from that is difficult. How was that personally for you in terms of, looking back on everything that you'd built, the community and all those sort of things, and then stepping away?
At that point, I was pretty burnt out and pretty exhausted. So when I finished up, it was actually a bit of a relief because I took some time off for myself and could start figuring out what was next. I'm incredibly proud of what we did at the University of Melbourne. And I look at what MAP is now, and I think it is, there's no one who works at MAP who was working there when I was there. It's in a new and different and better building. It's got a very different profile of how it supports people and what it does. But I think it is an excellent version of itself for what the university wants and how it operates within the university construct. So I think that MAP has evolved into what it should be for the university and has an extraordinary impact still on the startup community. It's probably a different impact in a different way to what it was doing when we were involved. But I think by having people like myself and Maxine, maybe some of the others kind of leave and kind of pass it on to the next group of people to manage it, it's probably found its appropriate place, which is a good thing.
And as you mentioned, you sort of took some time away to sort of figure out what was next.
Mm-hmm.
What was the genesis for Skalata?
It was late in 2017. I caught up with Daryl Wade and Martin Adams for a cup of coffee. So what happened was, and the university probably, I mean, I don't doubt it, they're listening, so it's fine. But the advisory board for MAP was pretty amazing. It had Martin Adams and Daryl Wade and Paul Little. It had Lisa Paul, the former Secretary for Education federally. It had Lenny Mayo, who I consider to be the godfather of the startup ecosystem in Melbourne. It had Daniel Madivan from Ecotone, who is just a wonderful human being, and Tony Glenning, who works with us now, and Sarah Morgan, who works with us now, and I hope I'm not forgetting, and Paul Hollyoak, who was amazing too. Some really impressive people. And one of the meetings that we had, I had resigned and I was finishing up in August sometime, and the day before was like my last advisory board meeting, and at that meeting someone from the university came down and advised the advisory board that the advisory board was being disbanded and that their services were no longer needed. And that was obviously a bit surprising given some of the profile of the people there, and as one of them said to me, I've never been sacked before, so that was pretty interesting. And they said they were rolling up an advisory board into a bigger they were putting together the Melbourne Entrepreneurial Centre and some other bits and pieces, and they were going to have an advisory board for that. So it had some sense to it, but I don't think they handled that as well as they could. But anyway, a couple of months later, I was chatting to Daryl and to Martin, and we said, look, we've developed a bit of a reputation in this area. We have a network of people that we know in this area, and we've got some experience here, I suppose. Do we want to have a crack at this and see if we can do it, not just at Melbourne University, but across the country? And Paul Little had said, if you guys are thinking about doing something in the future, just, keep me in the loop. And so then we went up Paul's office and had a chat to him. He said, yep, this sounds interesting. Like, let's kind of explore it a bit further. And then we spoke to Kate Cornick, and she was pretty keen, I think, to keep us involved in some way, shape or form in doing something for the startup community. And this is, I think, around the time that they had some grants available for, things that we might consider doing. And so she strongly encouraged us to apply for funding. So we put together a proposal, which I think I've still got somewhere on my email, which is probably pretty half-baked and pretty amusing if we were to look back on it today. We put together a proposal, and then we were successful with the LaunchVic funding. And without that, we wouldn't have started Skalata. And so then things started to roll from there.
Yeah, Playbook Ventures has been benefited a lot from LaunchVic's grant funding as well, which allowed us to get the syndicate off the ground. So, LaunchVic and Kate have done really important work in supporting a lot of what kind of happens around the ecosystem.
Yeah, Kate's a phenomenal operator. I can't think of anyone who is better placed to do the job that she does in the way that she does it. She's just extraordinary. And, we've now... So LaunchVic gave us a grant to get going of $3 million, and we've now raised $40+ million across the funds and various bits and pieces. So without that investment, that's now $3 million. It's been leveraged into $40 million of private sector investment. And there's hopefully going to be a lot more to come from there. And I'm sure that's the same across multiple initiatives, whether that's with you or others.
Sender is the OG startup accounting firm in Australia, catering to all stages of your business life. If you're busy running a business, you don't always have the time to do your own books and forecasts, and instead you can fully outsource your finance function so that you have the time and resources back to do what you do best, which is growing your business. They have a dedicated focus on founders, funds, and startups, and have an experienced team that can help you with everything from managing your tax to balancing your books to even helping with your exit strategy. I trust and use them with all of my businesses and can't recommend them highly enough. To find out more or to speak to Gareth and the team, head over to sender.com. All right, let's get back to this episode.
I know that Skalata has gone through a bit of an evolution as well across the two funds. So from what I understand, you were almost like an accelerator program in some senses with the companies that you were investing in. And that sort of since evolved into a more traditional investment style.
Yes.
Do you want to talk a little bit about maybe the lessons of that kind of journey and I guess why the shift in sort of strategy and approach?
Yeah, sure. I mean, it's probably because it was a bit of an evolution rather than a revolution from what we were doing at Melbourne University. So at Melbourne University, we used to give, by the end, 10 companies $20,000 grant and office space and mentoring. And so we thought, we know that there's a bunch more companies that need funding. We know that 20 grand isn't enough. So what should we do? And we said, well, let's give them 100 grand. Okay, that's a lot more money than 20 grand. And then we said, well, why don't we put them through a program for 6 months? And then if they do well through the program, we'll give them more money. Like, how much we do? Okay, 150 grand. And 100 grand and 150 grand sounded very large to us compared to what we had done previously, being $20,000. And there wasn't really anything like that around Melbourne, or I think even Australia, where it was a program where it was probably later stage than most accelerator programs, but it was a hell of a lot more money, 250 grand if you got the second tranche, compared to the 20 grand that most accelerators at the time were offering. And this is before StartMate was offering, I think, what they offer now, the 120 grand or whatever it might be. So that's where it started. And we did that for 1 or 2 cohorts. And then we realized there are a whole bunch of flaws with that model. And also there was probably a reason why venture capital is done the way that it's done. And the big issues were, 1, we would run intakes twice per year, but good companies need funding all year round. 2, it really diminished the perceived value of what we were offering, because people thought, oh, we get support for 6 months, but you're an investor forever. So what happens afterwards? And in reality, we're providing a hell of a lot of support to companies beyond the 6 months because we were part owners of their business. But so it diminished the perceived value of what we're offering. And 3, it also meant that, a lot of founders didn't want kind of group support. They wanted individual support. And so around 2021, I think it was, we dropped the program and became a more typical venture capital model where, we invest at the moment $100,000 to $300,000 initially in companies, and then we work with them for however long it needs. And for the companies that are performing well, we'll then follow on and invest up to $1 million in those companies, and it'll be more from the next fund. But the things that we were teaching them through the program are still the same things that we work with them now on an individual basis, but we've also kind of trained up the team to be able to do that. So it's a bit easier for us to deliver that support. So, during the program, we'd work on, business, ensuring that they had sustainable business model, ensuring that they had a growth engine and product market fit. And they're still some of the key things that we work on with them, but they're probably just different ways in which we go about doing that now.
Yeah. Something Maxine mentioned to me was, I think one of your first investments was in a company called Accelerator, which she mentioned no other VC was willing to sort of back at that time. What is your kind of focus on the investment side, and what do you look for in both founders and opportunities? Sure.
I mean, we couldn't be happier with Accelerator. That company's going gangbusters, and they've raised a lot of money from EVP, and EVP have been wonderful co-investors, and Justin and I sit on the board together at Accelerator, and Connor and Alex, who are the founders, are exceptional operators, and it's been really exciting watching where they're going. So our mandate, though, is that we will invest in companies that are innovative. So they must have developed something novel or unique and have a defensible barrier to entry. They need to be capital lean and capital efficient. So basically, with the initial funding we provide, they need to have at least 12 months runway, preferably 18 months. And they need to have operating leverage at scale, and they need to be market ready. So they don't have to have a lot of revenue or even any revenue, but they can't just have a concept on paper. They need to have at least an initial kind of MVP. And we have funded companies that, we're doing about $1 million a year in revenue, and companies are doing a few thousand. We had one company that couldn't afford to manufacture the first commercial prototypes, but they had a purchase order from the Northern Territory government for them. So we got the purchase order, saw that as validation, gave them the money to build the product, and then they did, and then they sold it, and off they went. So that's kind of the range now. And so that's the mandate. What we look for in terms of how we assess founders is unique insights into the industry is a big one. So if you've got a unique perspective into the industry, and you understand what the people in that industry need from a particular product or service, it means that you're really competitively advantaged when it comes to building a product that they want, and therefore ahead of the competition. And so a lot of the founders that we work with now are people who have a lot of domain expertise, and so that's a really big part of it. We look at the technical expertise and the commercial expertise too, and there's a bunch of other things. We've got a whole process that we put founders through, but a big one, it kind of starts with unique insights into the company. And if you take Accelerate as an example, both Alex and Connor had worked in freight and logistics for a long time, and they had this new take on things, and that's why we supported them.
Yeah. In my experience, I find that there's often an information imbalance between founders and investors. I think investors have the benefit that we see such a wide cross-section of companies. Our reference points are generally very different from founders who are just solely focused on their business and their kind of current opportunity. And so I guess sometimes even things like unique market insight can be hard for founders to understand. Do you have an example of what like what would that sort of look like in action?
I reckon it's probably one of those ones where founders probably don't even realize that they do have unique insights into the market. Like what you offered just then is a unique insight into the market that most people probably wouldn't have if they weren't in the industry. And so for founders, it's probably stuff that is common sense to them, but they've never really stopped to think, why is that common sense? So in terms of, I use the Accelerator example, what they realized when they were working in the logistics industry was that there was a very opaque amount of information, or was a very opaque system by which people were importing and exporting freight. And so what they wanted to do was design an Expedia type situation where you could say, I know exactly where my shipping or my container is, and I can optimize if I want the container to leave on a particular date or arrive by a certain date or have the shortest possible duration because it's sensitive and I don't want it on the sea for too long, or I don't care how long it takes to get there and I want to be able to kind of optimize, or I'm really cost conscious or I'm not. And so what they allowed people to do is like, that's a pretty basic thing. Like you think about, Skyscanner or one of the airlines, for example, when you're booking a ticket to go overseas, there's a whole bunch of those websites where you can find out, what are you optimizing for? Do you want a short trip? Do you want to have, the cheapest ticket? Do you need to arrive by a certain date? And so they just took that and applied that to the shipping industry. And as a result, that's gone well for them. So, the unique insights, it's not going to be one or two. It's going to be an understanding of the industry and an understanding of a need that isn't being met that will seem obvious to them, but they probably don't realize that it's obvious until they take a step back and look at it.
And from an investor perspective, sounds like you guys have a pretty broad, like we're very industry agnostic at Playbook Ventures.
Yep.
Selfishly, we're very opportunistic. We just want to back great founders going after big market opportunities. Sounds like Skalata is very similar from that perspective. And again, it can be hard to have little bits of information across a lot of different industries as opposed to being really deep in a particular sort of segment or vertical.
Yep. What
does that look like from a DD perspective for Skalata when you're sort of looking at, potential businesses and deciding whether to invest in them or not?
Sure. We've now got 80 portfolio companies, and as you would know, in order to, it's a high risk, high return asset class, and the best way to mitigate the risk of the asset class is to have really strong diversification in the portfolio. And we have a DD process that we put all the companies through, which is the same regardless of what sector they're in, and we are sector agnostic. We do have some priority areas, which are health tech, med tech, women founders, climate tech, agriculture, and AI and machine learning. And they tend to be companies where we've already got quite a few investments, have learned a bit more about the sector. And we also think that there's really good opportunities for those founders in that group to be able to raise from other investors who are also interested in that segment as well. But in terms of the DD process we go through, it's quite comprehensive. There is commercial, legal, financial DD that we do. A big part of the process that we go through is customer interviews. So we will call the customers of our potential portfolio companies and have a chat to them and say, why are you using this product? What can you tell us about your experience, working with a founder? Have they been good to work with? That's one kind of theme around the questions. But the other one is, is this a product that you're using because they approached you and you thought, yep, that's a good idea, I want to use it? Or is this one where you've tried a bunch of different solutions because you're really desperate to have a solution, but you just can't find the right one, and this is finally the one that really works for you? And if so, why does it really work for you, and why are all the other ones so bad? And these conversations are so illuminating. So I think one of the things that investors can get themselves into the trap of, which is honestly the arrogance to think that they are the target market, and they are not. So when it comes to, if you have someone coming through and they're selling a product to a target market and you or I are not in that target market, it is absolutely ridiculous to think that our opinion has any weight whatsoever about whether or not it is a good solution or not, because we are not the target market. So go and speak to the target market and find out what they think. And then from that, I think you get afar. And that also too, it's interesting to me. I think there are a lot of investors who look at something like, yeah, this is a great product, I would definitely use it. Like, who cares? There's so many markets out there. And I think that way you might also have investors who get caught up investing things that they like in terms of products that they would use. But that doesn't matter. There's plenty of other people who are in different demographics to who you are and what you do.
Yeah. And from what I understand, almost 50 investments have sort of come from your second fund.
Yes.
You mentioned you've got, is it about 80 odd
Yep.
companies in your portfolio?
30 in Fund 1 and now almost 50 in Fund 2 because I think we transferred some more money last week.
Yeah, I think you guys were listed as one of the most active, if not the most active investor in Australia.
Mm-hmm.
How do you balance selfishly, I just want to know how you sort of, how do you balance the time commitment of, looking and sourcing and kind of going through the process of new potential investments versus support for your portfolio?
That's a good question. I don't think we've nailed that yet is the short answer, but the more detailed version is that we looked at about 3,000 companies over the last year, and we have to be really, really disciplined with how we put companies through the selection process and then also how we support them. So through the selection process, you want to make it as best you can, and it doesn't always happen this way, but you want to make it a good process for the founders and for the investor where you don't waste their time if it's not going to happen and you don't waste your own time if it's not going to happen. So upon reading a deck, if we think there's merit in taking it further, the next step will be a 15-minute discovery call. And that's just to understand if we think it's competitive or not. If it's not, then we can screen it out and let the founder get on with raising from people who are going to invest. And then you have to be really targeted with and efficient with the time that you have. When we get into companies get into the portfolio, we have a pretty disciplined process that we put them through, which is, start with a strategy session with the founders, identify what the key milestones are for that business for either the next round of funding or to get cash flow positive. And they generally are about 12 to 18 month horizon. And what are the 3 to 5 things that are absolutely critical to your success? We then help them get their metrics dashboard lined up because a lot of founders struggle with that initially, but we have templates and experience in doing that. So a lot of it is, templates, and then also help them refine their go-to-market. And if we can help them nail those 3 things and have really, really clear on it, then you can have catch-ups with them. And we have more formal catch-ups every month, and we'll say, how are you going against your 3 to 5 key goals? Are you on track or are you off track? And if you're off track, how do we get you back on track? And how are the metrics? If you've got a good metrics dashboard, you can read that. And if there's no issues, you get great, tick, off we go. Or if there is an issue, it'll come out in the metrics and you can identify it and resolve it really quite quickly. And that's part of, to the point that the earlier discussion around some of the infrastructure around a company. If you've got a really clear understanding of what your milestones are and a really good metrics dashboard, which doesn't have to be a big one, it's pretty basic, but it has the right information for the company at your stage. That is, corporate infrastructure, for want of a better word, and it sounds a bit bureaucratic when I say it like that. But that is really helpful to understand the status of a company, diagnose issues, and then you can resolve them quickly. I think a lot of founders really struggle because they can't identify what's going on in the company if they don't have a good metrics dashboard, and therefore they spend a lot of time trying to find out what's going on. And then it's only once they've figured out what's going on that they can actually resolve that issue. So you have to be quite disciplined with your time, but I think through experience and templates, it gets a bit easier for us.
Yeah. Rohan, I can talk to you for hours, but I know you've got another meeting to get to. So maybe I'll end with a final thing. So someone else I spoke to as part of the research process was your wife,
yes,
Laura, who, I think it's kind of evident through a lot of what you've done in your career, but also speaking to everyone, one of the things that they sort of mentioned was that you're very sort of inherently taking risk and being bold is a large part of your character. Something that was highlighted through a painting that I heard you've got in your house that was commissioned. I've actually got to see. She sent through a photo of
thanks, Laura.
You as an astronaut sipping a glass of whiskey.
Yep.
I love it. We might have to post that out somewhere so people who are listening can have a look.
Yeah.
But I think it's kind of one of those things where I've sort of noticed and kind of talking to a lot of founders and people who've kind of been in this space for a long time is I think that's inherently a large part of who we are, but people do get jaded over time, and it does get a little bit more difficult to kind of retain a lot of that sort of risk-taking and boldness as there's more and more kind of things that kind of happen, things get bigger, it gets hard to retain that. How do you sort of think about that for yourself, and how do you sort of retain some of those qualities?
Yeah, that's I will answer that, but I just want to, for the record, I want to say that I did not commission that painting. My mates commissioned that painting for my 30th birthday, and they got one of my other mates to paint it. And the 2 conditions were it has to be ridiculous, and Rohan is not allowed to have any say into what it is. So that wasn't that I commissioned that one, for the record. And thank you, George, for a wonderful painting, which I love, and to my mates for paying for it. But I do think risk-taking, it's interesting. The most successful entrepreneurs are not the people who seek to take risks, but they mitigate them and they manage them. And I think I have learned over the years that my tolerance for risk is actually probably way outside the norm. And I can find that really frustrating when I'm like, why why wouldn't people put more money into venture capital? Or why wouldn't you start that company? Or why wouldn't you do this? And I can get quite frustrated by that, but you probably need to realize that is not on the spectrum. I'm probably a bit further out into one of the sides. I think I had a really interesting conversation with one of our portfolio companies earlier this week, and they're an excellent founding team with a great product, and they're in a situation where they're doing about $620,000 annual recurring revenue. The burn rate's about $1 million a year, and they've got to close the delta, and they've got 12 months to do it. And the founder and I were chatting. The founder said, look, he felt like he was being a bit risk averse and was a bit apprehensive about taking certain steps. And I said, well, what's the alternative? If you don't take the steps, you're probably not going to close the gap in time, and then you're in real strife because you need to get your growth rate up if you want to raise more money. So I think sometimes when it comes to attitudes towards risk, there's probably two things that I would say. One is, what is the alternative? If you don't do this, what's going to happen? And even if it does all go pear-shaped, is it going to be that bad? Like, if you actually kind of think through like worst case outcome, like if my startup fails, is it the end of the world? And the answer is no. It's going to be like, yeah, no one wants their startup to fail. Don't get me wrong. And you want to do everything you can to avoid that happening. But at the same time, like there will be learnings that you can glean from it, or things that you can take from it that will help, stand you in good stead for your career, whatever that might be. And there are plenty of founders who have had companies that failed, and the way in which they held themselves during that process and the respect they gained from the people in and around them, was really important, because those are the people, particularly investors, who went on to fund their next company. And we have in our portfolio, there's one of our companies that just raised a large chunk of money. And the reason that company is in our portfolio is because the CTO was part of another company in our portfolio initially, which ultimately failed. And we said to him, look, we think you're really great. If there's anything you're working on in the future, let us know. And he said, well, actually there already is. And we spoke, and then we funded his second company. And then here today, they're kind of going gangbusters. So I think it's also worth thinking, like, what's the worst thing that's going to happen? And oftentimes it's not necessarily as bad as you might think.
Yeah, I think kind of drawing on that point, I've shared this story on the podcast before, but my friends held an intervention for me.
Oh, good.
The first time I quit my engineering job to start a fashion tech company. And, I think it came from a really good place, and everything they said actually turned out to be very true of like, what did I know about fashion? What if this didn't work out? I was giving up this great job to kind of go after something, and they thought I was being mad and taking all of this risk. I thought that, the way that I looked at it was, if this works out, I get to spend all of my time doing this thing that I really want to enjoy and get to build. And if not, I just get to do what I was doing before. And
exactly,
that just didn't seem like a huge risk to me. I was like, I'll just maybe I'll spend a year or two kind of doing something. But it is hard, I think, for people to kind of wrap their head around the worst case scenario of that, and sometimes over engineering that. And, you don't want anyone to fail, but sometimes going through failure and kind of learning it's actually not that bad is actually really helpful, and very, going back to what we were talking about at the start, like just very freeing for a lot of people.
It's liberating. Yeah. I mean, I think, firstly, how much did you learn from that process that you've applied taking forward? And secondly, if you don't have to be worried about that, there's a massive weight that comes off your shoulders, and it actually allows you to be more bold. And the analogy I was using, and this is a very Melbourne analogy, but with the founder earlier this week, is, in the footy match, right? Last quarter with 5 or 10 minutes to go, your team's down by 3 goals, and they throw caution to the wind and they start kicking it through the middle. And all of a sudden they take some more risks, and a couple of them pull off, and it's not uncommon for the team to come through and win. And sometimes they might lose by more, but there's a chance. So I do think that, sometimes you need to take risks in order to get there. But yeah.
Yeah, and sometimes we kind of look at things in a very binary way as well. It's either something works or it doesn't work, but oftentimes, even if it doesn't work, all of these doors and opportunities open up that may not have been possible otherwise. This podcast and this conversation wouldn't have happened if I didn't take that crazy step to leave.
Think about how much that's changed your career and the prospects for it.
Huge.
Yeah.
Huge.
Yeah.
So, yeah. Rohan, once again, could talk to you for hours, but really appreciate your time. For anyone who wants to find out more, say hello, get in touch, what's the best way for them to do that?
I'm on LinkedIn, or we've got a Skalata website, or, just send me an email. If you can figure out my email, it's not that hard, I can assure you.
Perfect. I'll make sure all the links are in the show notes. Maybe we'll leave the email off, but...
that's all right. I think people, if they're entrepreneurial enough, I'm sure they'll be able to find it.
Perfect. Rohan, once again, thanks so much for coming on.
Thanks, Rohit.
It's been a pleasure.
Cheers.
Thanks for listening to episode 198 of the Startup Playbook podcast. As always, full show notes from this interview will be available at startupplaybook.co. I'll be back next week with another episode, but in the meantime, if you enjoyed this interview, please don't forget to like, share, and subscribe. As always, thank you for tuning in, and I'll see you next week.